All right, so you guys want real world price targets. I'm not the guy for those. I do enjoy watching those videos. So if you want to get real world price targets without all the rockets and the fire and the down and bad news, then stay right here. Hello everyone and welcome back. Once again, this is Clean Money. Thanks for tuning in. Appreciate you guys stopping by and giving me some of your time. Today I want to talk to you about where silver and gold is going to go in 2023. Your guess is as good as mine. I am not good at picking bottoms and picking tops. That's too difficult for my little brain. So I decided to reach out to Lior Gantz and talk to him about it because he knows what he's talking about. He does this for a living. It's his job. It's his job to know the entire market, not just specific gold and silver and what we should look out for and specific things that tend to drive them up and down. And he's really going to break it down. So if you want real world price targets, okay, for you, me's, for everybody who believes in doing it the safe way, then stay right here. Let's listen to Lior. He's going to break down gold first, and then he's going to break down silver, and he's going to tell you what drives them and what's going to possibly hold them down as well, and what to look out for. And one of those price targets has already hit, and he was also right about the CPI print that was coming up in November. So stay right here, guys. Listen to the video. He knows what he's talking about. You're going to like the price targets. So stay right here and enjoy.
Do you think that the spot price as it is today, do you think it's going lower? And if so, when will we bottom and when will we start to recover?
Um, I think that gold and silver actually held up pretty decently in 2022. And I think that for the most part, the dynamic is this. When you raise interest rates, as the Fed does, and at the same time as interest rates are rising, what's called the break evens, which are the difference between the inflation adjusted rate and the 10-year treasury or the 5-year treasury, etc. When real interest rates in the economy go down and you actually get a positive rate of return on bonds,
Right.
it diminishes the reason for institutions to own gold. Let's put silver aside because most institutions don't care about silver. It's the retail crowd that buys silver. So let's talk about gold real quick. Right now, the trend is towards positive real world rates. So don't look at, most people, what they do is they make the mistake of taking the 10-year bond, which yields 4%, the CPI, which is at 8.1, and then they say, okay, there's negative rates because it's minus 4.1. They deduct the two. That's not how Wall Street looks at real rates. They look at what's called break evens or tips, which are basically treasuries that are inflation protected. And those are coming around and almost turning positive. And that's why you see a lot of pressure on gold, because if bonds are now becoming a viable investment class for fixed income, then gold is in trouble. Right. And I'll give you a good example. My own hedge fund manager called me and we discussed a few things, and then I said, look, is TINA over? TINA is an acronym for there is no alternative. Is TINA over? He said, look, at this point, I can buy shares of American Airlines, and the growth of the company is like 3 or 4%. There's a dividend, there's buybacks, etc., etc. Or I can lend American Airlines money right now. The bond is 12%. So what he's trying to tell me is that bonds have now become a viable investment class after almost 38 years of a bull market. In other words, anyone that bought a bond since 1982 has seen the price of the bond go up because the yield has come down. In August of 2020, when yields bottom, at 0.5% for the 10-year bond. Literally, the government issued bonds and people were willing to buy them with 0.5% of a yield for a 10-year bond. So when that started to bottom, when that bottomed in August 2020, that's when gold peaked. Gold peaked August 2020, right when bonds bottom. And then as bonds have started to climb, gold has started to correct down. And the reason is that gold correlates with what's called the tips or the break-evens or the real world yield after inflation. And if that is trending upwards, then gold is in trouble. Now, we are reaching a point where there's a lot of criticism that the Fed has overdone rate hikes. We are reaching a point where rate hikes are really starting to impact everything but inflation. So you see it in home prices, you see it in the stock market, you see it in everything except the CPI numbers for now. But you will see those in the CPI numbers. This is just a lagging effect. Yeah, it's a lagging effect, but it will come. And I think that once the markets start to believe that the Fed is either going to hold the rate hikes or slow it down, then the tips will start to turn around. And that's when gold will bottom. Now, to ask the question, where will it bottom? The only thing you can do is say, okay, how much more interest rates hike are coming, and per 25 basis points, how much does gold correct per 25 basis points? In my opinion, gold has held up very well, and I think that if the Fed raises by 75 basis points in a couple of weeks here in November, and then let's say either 50 or 75 basis points in December, I think that gold will form a bottom right above 1,500. Before this, I thought that it would form the bottom around 1,400, but it's behaving really well because stocks are performing bad, and it's behaving as a hedge for stocks and not a hedge for inflation. And I think that that's really good, and I think that that will continue during 2023. So I think it forms a bottom in the next 3-4 months here, and in the first quarter of 2023, when the Fed really starts to indicate that they've turned the corner on inflation and are starting to win the fight, I think that that's when gold starts to go up again and resumes its trend line, an upward trend line. I think that ultimately during this business cycle, gold will go above $3,000 an ounce, and I think that if you look at the dollar index, which is the most important thing for silver, not for gold, for silver, for the DXY. If you track the DXY, once the DXY goes below 105, you should start to, if you don't have enough physical silver, you should start to accumulate. If it goes below 100, that's really a time where the dollar is actually entering like almost a correction, and you should consider doing more into silver. And if the dollar starts to break into the 90s, that's a dollar bear market, and you should really consider something that's not as conservative as just silver spot, but silver options, miners, leverage ETF. Because if the dollar is entering a bear market for the first time since 2011, because the dollar has been in a bull market for 11 years now, then silver can really start to hit those higher 40s, 50s, and into the 60s. I think that the real gouge is 90 on the DXY. I don't think that we're going to see it in the next 2 years, but going towards 2025, I think that silver has a real shot at piercing its all-time high at 50 and going above that. In general, I think it's a phenomenal time to be looking at precious metals in general, because we have an inflationary decade ahead of us with no solutions, with a lot of deglobalization, which is going to hurt the dollar. And once this all starts to happen, the dollar index, if it goes to below the 90s, this is going to really change the way that people view gold and silver.
All right, so that was Lior's presentation. That was his price targets. Yeah, the thing that got me when he talked about the entire decade going to be an inflationary decade. And I can believe that, because I think what the Fed and other central banks around the world are going to do, I think they're going to say, well, guess what? 3-4% inflation rate, that's about the best we can do. And I think they're just going to call it quits right there. So I think that's just the way it's going to be. So let me know what you think down below. Do you like the price targets? Do you agree with them? Disagree with them? Let me know. Let's discuss it down in the comments. And as always, guys, keep grinding on your stack.